and welcome to the Honest Property Podcast with your hosts, Becky and Ruth. And we like to talk about all things property, business, and entrepreneurship. Today on the podcast, we have Sophie Foote, and she's to blame, really, with us starting this podcast. Yeah. I remember messaging you a long time ago, being like, what microphone do we need? You were like, get the floppy one. And we still don't have it.
I know I was having the shopping list.
But yeah, basically we heard of Sophie through listening to the Girls in Property podcast. And instantly we were like, oh, she's so cool. She bought an island in Indonesia. What goals? So we're like, we definitely have to meet her. Yeah. And then we met in person at one of the Girls in Property retreats. The first one, actually. And we met Sophie and we were like, yeah, we're talking to you now. Yeah. I think we were sat on the grass in the sun, just having a grand old time.
It's so nice to meet you there.
Yeah. But now you're you coach, you write for a magazine, don't you? Actually, you tell us. Yeah, you tell us what you do.
Who am I? Where do I start? Okay. I'm
Actually,
Sophie.
start from the very beginning. Start from Indonesia.
Okay. So I was born on Christmas Eve, 1985. And then when I was about 18, I took a gap year and wanted to go somewhere completely different. I was like, I'm ready to live an adventurous life. So I signed up to this gap year organization to teach English and said, can you send me somewhere completely different? And they said, okay, we're either going to place you in West Africa or East Malaysia. I was like, cool, they both sound amazing. And they sent me to Kota Kinabalu, which is in East Malaysia, on the island of Borneo. And yeah, I was teaching English in a secondary school for 3 months, which was so fun, just thrown into like the Malaysian culture. And I remember we had this woman who was like our local contact, and she was like, don't point your feet at anyone when you're sitting down. Don't touch anyone's head. And I was like, okay, like these are really interesting things I didn't have a clue about. So yeah, and discovered diving when I was there. I'd done a bit of scuba diving before, but the reefs out there are amazing. The islands, they've got like turtles and sharks. And yeah, I made friends with all these diving instructors, started dating one, moved it. And then I was like, I'm going to stay here for a year. And I even said to my parents, I was like, there's a marine biology course I could do here. And it would be like diving with sharks every day. And they were like, we just want you to study in the UK. We just want you to get your degree. Then you can go do whatever you want. So I was like, okay, I'll come back. But I ended up staying the whole gap year and becoming a dive master, which is the first professional qualification. And then every summer from uni, I worked. I got a job in Thailand and I did my instructor course there. Then the next summer, I went to Vietnam and ran a dive shop there. I had like a little scooter, put my face mask on, was like zipping around the streets and going diving. And then after that, I got a job in Fiji for 6 months. And I was just loving it, like teaching diving, like looking after people, seeing them breathe for the first time underwater, living on a beach. It was just the best.
Sounds like the dream.
I came back and I did a master's in Southeast Asian economics, politics, and anthropology. Because when I was living out there, I was learning about like tribes and headhunting and different societies and political systems. And it was fascinating, like all the history in that area. So I went to SOAS and did a master's. And then I met my husband, Simon, who was finishing his engineering degree. And I was like, I don't want to get a job here. I'm not finished yet, but I want to start my own business because when you're a diving instructor, it's the best lifestyle ever. But you're not really saving any money. You're having a few beers, you're hanging out with your students, you can pay for an apartment, but you don't end up with anything. So I said to him, do you want to start a business somewhere? Probably in Southeast Asia. He was like, yeah. So we found some land for sale and bought a beach in North Sulawesi. We went out there for a month to have a look around and just fell in love with the place. And then spent another month figuring out, right, what language do we need? What visas do we need? How do we start a business here? And had this huge learning curve and decided to commit and go for it. So we found investment and just built it. We were off grid. We had 8 cottages. We learned everything about business. Like we were just making it up as we go along.
We were just so drawn to Sophie. Yeah, like, but it's too cool. But also anyone that loves Southeast Asia is in our heart.
I mean, you can't describe it. Like it's just beautiful. And we just had the most amazing 5 years there. We ended up with 11 Indonesian staff. We had our 2 kids out there. We built this business up to a really thriving dive resort. We made friends from around the world. We were threatened by Chinese mining, which was illegal. So we had to create an NGO with the other resorts and really fight. We were raising money. We were sending lawyers to Jakarta. We lost, then we won. It went to appeal. We were like, if this mine happens, we're all destroyed. Like, it's going to destroy the reefs. No one's going to dive here. So that was a bit of a stressful year. We had wildfires. We had tsunami alerts. Like, we were on TV at one point. It's just this massive adventure. And then when the kids were 2 and 3, we were like, right, they're going to need to go to school at some point. What are our options? And the options stay here and like homeschool, because it was a really remote island, or go back. And we were like, do you know what? We've been here for 5 years. We've now got kids, like the grandparents are missing them. We're more drawn to the UK now. So we moved back. And we did a couple of things, but it was the year before the pandemic. So that was just a crazy year where we were then homeschooling the kids. And then I just thought, I really want my own business again. Like, I think when you have your own business, just the thought of working for someone, you're like, I have to book time off and I can't, I have to go in at a certain time every day. It's a privilege that you don't appreciate. So yeah, I started a property business basically, which is all based around rent to rent HMO. It's in Southampton and Bournemouth. It's nearly 4 years old, so it'll be 4 years old in 2024. And yeah, we've just signed 10 HMOs in one deal, which is our biggest deal ever.
Oh my goodness.
So we had 19 HMOs in the business and we've now gone to 29. So it's grown really well. It's a really scalable model. And yeah, we've moved to Dorset. Like, I'm living my best life by the sea again, which is really nice. And yeah, YPN asked me if I would write for them. Actually, I asked them. This is what you need to do. You just need to go and be like, can I do this?
Yeah.
They were asking for contributions. And they were like, has anyone gone from like 0 to 5K in income or something like that? And I put my name forward and they interviewed me and they did like a 4-page thing on how I'd grown the business in the first couple of years. And I really got on with the girl who was interviewing me. And afterwards I wrote to her and said, can I write for YPN? And she was like, yeah, we're always looking for contributors. Send me your ideas. So I sent loads of stuff on like HMOs, like how to set them up and how to find them and how to manage tenants. And then the other list was kind of personal development and business stuff. And she was like, we've covered HMOs. We do that all the time. But we need a new perspective on business and growth. And like, I think I've just submitted my maybe 20th or 30th article for them. So that's been nice. That's been good as well.
So you're very good at writing then.
Do you know what? Every month I get to the deadline and I'm like, okay, I need to sit and write. And I just get this blank, Word document. What shall I write about this time? And then I'm just like going through my mind, writing down ideas, and then it just comes out. I think it's the day of the deadline. I'm like, I need to do it today. I need to submit it tonight. But yeah, once I start writing, I can't stop. So it's been good.
Well, that's good. That's really good. I don't think I could write. I don't think that's something that's not my personal strength. I think I could. I think it's one of those things where it's like the hardest bit is starting. And then once you start it, you're kind of in a flow state and everything's just sort of pouring out of you. Yeah.
Definitely.
So now you're also doing Star Collective? So sharing more about how to invest besides just property investing. Yeah, because it's so important to also not like the property is great, but there's also diversifying your investment strategy as well. And I think that come about.
Yeah. So I think when you first get into property, so I started in rent to rent HMO and I was like, this is property. And then I started going to networking meetings and meeting people online and you're like, oh, there's this thing called serviced accommodation. Okay. I was thinking, oh, maybe I could do that because I live near the sea. That could work. And then I meet people doing like massive land deals or commercial to residential. And there's so many things you can do. but I've just stuck to my HMO route. I'm like, I'm niche. I know HMOs. I'm going to stick with that. But at the same time, there are different strategies you can do. And it all involves investing. Like, I think investing at the basic fundamental part of it is taking something and adding value to it. So if it's an HMO, it's making it better, it's adding value. If it's essays, it's making it as beautiful as you can. If it's land, it's maybe getting the planning. But the easiest thing to do, and also if you haven't got much cash, is invest in the stock market, I think. And so I kind of started looking into that. There's an amazing podcast called Girls That Invest.
I
She's
love that.
amazing. And she really broke it down to, you think about stocks and shares as, I know nothing about that. It seems really risky. It goes up and down. I have no idea where to start. And so people just don't start. But I think once you educate yourself a bit and you learn about it, you look at index funds and things like that, you can see it's fairly low risk. It's good. Compound interest is an amazing thing. And the stock market has historically given 8 to 10% returns a year. So I was like, yeah, I'm definitely going to do that. So I started doing that. Investing in stocks and shares. I do a bit of Forex trading as well, which again seemed very technical and confusing, but it's not. It's very straight.
That's unknown territory for me, the Forex part.
What was that?
Forex is unknown territory for me.
Yeah. I'll talk you through it. You're fine. I'm getting, 4 to 6% a month on that. So it's decent. Like, it's really decent. And I think what everyone needs to do is really learn. Like, I don't want to use the word empower, but it is empowering to just understand it and be like, okay, I understand. And then just go for it. Because the sooner you get into investing, the longer compound interest has to really snowball, and it's really magical. And I think we need to get more girls doing it, more women doing it. Like, let's just do it.
Yeah, absolutely. Well, when we started our investing journey, like a lot of people do, they begin with reading a book called Rich Dad Poor Dad by Robert Kiyosaki. And he basically says you have a business and then you invest what you earn from that business into either stocks and shares or property. We just picked property because it seemed less boring at the time, and we understood like the concept of a house. However, and renting it a lot easier than what stock and share is. But I would always say like it's good to diversify and do both. Or have like business and then stocks and shares, also like real tangible assets. But not only that, I think it depends on your risk factor as well. And like personally for me going into my Ds, I want to keep things simple, and stocks and shares is a great way to keep things simple, and you don't need to do all these extravagant strategies in property. Or if you're not someone that wants to be a day trader, but you can still invest and do it as easy as possible. That's not going to like you said, it's the compounding. It's just doing it and not feeling like you have to do all these multiple ways of investing. Just invest in like the easier ones then. But just start. Yeah. Just to start.
I completely agree. Like, it's so important to diversify. And it's so easy to start investing in the stock market. Like, you can start with £1 and you can start with today, and you can start with an app on your phone. So everyone can be a stock market investor right now, which is really exciting. Like, 50 years ago, this just wasn't possible. Now it's possible at the click of your phone. So
it's also the easiest way to start investing. I mean, it's the first one to start investing in over property, I'd say. Yeah, but low barrier to entry. Yeah, low barrier to entry. That's right. Which means then it's more accessible for more people, and that's the main tip.
Yeah, I feel like we just need to break down the barriers to say, this is what it is, this is how to do it, and this is how to do it.
Yeah. So there's so many, like when I started looking at it, there's so many apps and so many platforms. And I know that, like, as a tip, they say, like, the general advice is to make sure that whoever the broker is not charging too high a percentage. And I know that there's platforms that have lower percentages than others, but is there a benefit, like a clear advantage for having like a free platform, or is there much difference? Like, is it worth paying like for a higher brokerage fee for this service, or no, not really?
I think the most important thing is learn to do it by yourself and then just pick an app. because the apps will like everything is going to charge you a tiny little fee, whether it's like 0.01% or 0.025%. But doing it yourself is so much better over the long term than getting like an investment advisor or something like that. So I made the mistake of going to someone and they were like, yeah, what we'll do is we'll put your money in all these funds, and all the funds have got managers. And the manager's full-time job is to try and beat the stock market and pick things to put in the fund and make the fund perform really well. And it could go up or down, but it's generally done all right. So what that means is they will then take a fee, and it will seem like a really low fee, like 1%. But if you look at the lifetime of your investment and the compound interest, these people are going to make thousands or tens of thousands from your initial investment and as it builds. And if you look into it further, most of these funds don't beat an index fund. No human can ever beat the market, which I find really interesting. It's like the white coat effect of when you see a doctor and you trust them because you're wearing a white coat. Like you're trusting these people because they're like, yeah, I'm an investment professional. I'm a fund manager. I'm going to, they're reading the papers. They're looking at the charts. They're doing everything they can to analyze the market. But then we look at the data. If you put your money in an index fund, you're fine. Like you'll generally beat these people 90% of the time. So it's just having that knowledge, like let's just uncover it and show people what the stock market is and stick it in an index fund.
This is included as well in this conversation about pensions. What's your take on this as well? Because a lot of people then give their money to someone else to invest their pension into lots of different things. They don't even know where it's going. What do you think about that?
Pensions are really good. Everyone should have a pension. You can get self-invest pensions, like SIPs and things like that.
Yeah.
The most important thing is you have one and you're really highly contributing to it. And a lot of employers will match contributions, which will just give you, instant free cash that they're matching. So stick it in a pension, but be curious and find out what's that being invested in. Because when you do it, shall I explain what an index fund is for the listeners?
Yeah, go ahead. I think there's so much jargon that just alienates people and is like the first hurdle that puts people off. So if you don't mind sharing just like the basic jargon so everyone
let's rewind and let's talk market. So basically, imagine I have a business, so I've got my cake business and that's a private company. It's mine, and you might buy shares in my business for, £10 or whatever, or £100. So you've now got shares in my private business. Fine. And if the business does really well, your shares will increase in value. And at the end of the year, I might pay you a dividend or something like that. So say my cake business is doing really well. Like I'm making thousands of brownies a day. I'm posting them out. I'm like, I need more money to do this. I'm gonna take my money public to raise money. Companies do to go public is it's called an IPO, which is initial public offering. So you'll read in the papers like, oh, Facebook has IPO'd, it's gone public. So what happens is there's a very complicated valuation process that lots of banks do to value your business and how much they think shares are worth. Then the IPO happens and I might raise £1 million for the cake business because I've sold half the shares for £1 million, which means my half is now worth £1 million as well. Great. And then I can invest that money in like a big kitchen or research and development or more staff. So people go public to raise money for these different things. And then not only do you get the money for that, but your founders are going to get nice dividends and nice payoffs. So Facebook IPO'd in, I think, 2012 for $16 billion. So Mark Wood did pretty well there. So now that these things are public, so this is now a public company because it's got a public stock market offering, that means that anyone can now buy shares in these businesses. So when we invest in the stock market, it's pretty much impossible to know which stocks to choose. You'd be like, maybe Tesla's doing well. They sound like they're doing well. I quite like Disney. They've been around for a long time. Maybe I'll buy a Disney share. And, you might, it might be like a gym chain you like, or, some kind of business that you just like to have. But that's not a very good strategy. So then we move to index funds. So an index is basically like a list of companies that are doing really well. So the famous ones are like the FTSE 100. Which is an index of the 100 best performing companies in London, or the biggest companies in London. And it follows them as an index. And if a company doesn't perform, it gets switched out. So the FTSE 100 is generally quite well performing. I've written this down. In the last 100 years, it's done 8.1% on average per year. And then another index is the S&P 500, named after Standard & Poor, who created it. That's the American top 500 companies. So again, if a company performs badly, they'll get switched out. So with these indexes, the index funds follow these indexes. So if you buy an index fund, what you're doing is you're buying a little tiny bit of 100 companies or 500 companies that you know are performing well. And what I find really interesting is you can buy an ethical index fund. So we're not going to be supporting like oil or tobacco or
What's
like
that one?
anything. You can just Google them. There's thousands, but you can get like, environmental and social ones. You can even get a global index fund that, if you're worried about America because of the election or, Brexit or certain things happening in certain companies, just put money in a global index fund and then it's even better. It's even more well protected.
That's so interesting.
Actually, Warren Buffett, who's like this investing god, he's been very good at, reading the papers and doing hours and like he's dedicated his life to looking at companies and businesses. And he says most investors should put their money in index funds because it's so hard to predict what the market's going to do.
Yeah. Spreads the risk.
Actually, it can be really simple. If you've got £1, so I use the app called Trading 212. But there are loads of apps out there. Vanguard.
I hear good things about Trading 212 having like low fees and still doing the same thing. Yeah.
So you can literally grab your phone, download Trading 212, open an account, and then put some money in. And then the next very important step is invest that money. So just put it in the account. You have to choose what to put it in. Otherwise it won't grow. And then you just leave it and you'll just get a little chart showing you what's happened, which is amazing. And that's what I do.
It sounds so simple. It is so simple. It's so like the steps to do, it's like 2 steps.
It's so simple. And honestly, it makes me like really fired up when I think, 30 years ago, 50 years ago, this wouldn't be possible. To buy stocks and shares, you'd have to like get a specialist broker who would make phone calls on your behalf. And now it's so easy. Like there's no excuse. You just have to do it.
What do you think is the thing that stops people from doing it?
Well, I think it's fear that, we have to say at some point during this podcast that investing is risky. Your investment can go up or down. And that's the same for property. It's the same for stocks and shares, crypto, which is super high risk. So you need to do your research because it can be scary. You hear about market fluctuations and headlines, are always going to really sensationalize what's happening.
Well, yeah.
Just go back and look at the data. Go and do your research. Google the FTSE 100 and the S&P 500 and other index funds and look at their performance. But when I talk to people about investing as well, you mentioned your age. Like it's really important to figure out your risk profile based on your age. So if you're 20 years old and you've somehow come across £1,000 or £10,000, you might want to put it in investments. And you might not worry if it's in a high risk investment because you can leave it to just do whatever it needs to do because you're not taking it out until you're 60. So you might buy some crypto and it might go up and down and up and down. And then maybe in your 30s and 40s, you might take some of that out and put it on a lower risk investment so that it's okay and you're keeping it and it's compounding nicely. Whereas if you're in your 50s or 60s, you might think, I'm not going to put 10 grand in crypto. Maybe I'll put it in an index fund so that we know generally it will increase 8 to 10% a year. But if crypto crashes several times over the next 20 years, I don't want to be part of that.
Yeah.
So I think anyone thinking about investing needs to think about their risk profile and how long they're going to be investing for. So high risk things are like crypto, because no one knows what is going to happen with that. Newly IPO companies. So the initial public offering, we don't know what's going to happen to that stock after it hits the stock market. And things like emerging tech, emerging healthcare. These are things that are high risk, possibly high reward. We're not sure. And then lower risk strategies are like index funds, government bonds, which are usually fairly solid, and even a savings account. Like a savings account will give you a certain percentage. It's very low risk, but it's quite low reward. So it's really
Actually,
important.
that's even more a really good point, is that even if you don't have the knowledge yet to invest in these index funds, the first thing that you could do is open up a savings account that has a high interest rate. Like that's one thing that you do have in your control instantly.
Yeah, definitely. Yeah. And also it depends where you are financially as well. So if people have debt, if people have credit cards, pay that off before you start investing. Like if there's a really high APR, like an interest rate, you want to be getting rid of that debt before you do anything else. So there are certain steps to go by for really good financial literacy, basically. So sort out your debt. And then people talk about like an emergency fund or a certain amount in savings. And it's kind of recommended to have like between 3 and 6 months income in a savings account so that you've got that cash in case of, something to do with your health or something to do with your home or something to do with your car. You've got that cash on hand. And that seems like a really high amount for most people, like 6 times my income in a savings account. What? But
It used to be like 3 times, and then post-COVID, now a lot of people, especially as well if you are an entrepreneur, are saying it's more now, just because you just don't know if there'll be another global crisis. So I think that opened my eyes anyway to save even more.
Yeah, exactly. So you need to have that cash put aside. I call it having a secret bank account because you've got all your stuff, you've got your income and outgoings, and then I've got my secret bank account. I put a bit of cash in, and then if I want to, I could treat myself maybe. I could do a spa day, I could go to the theatre, but I've also got that cushion of cash. It just gives you so much security.
You know what I did? I'm sure that you will go on to this later. My husband and I, this is how often we go on a date, is that I created an automated date night pot in an interest account.
I love that.
It was full. It was thousands in it. That's how often I forgot about this account. And now we're actually using it now. I think like also automating.
Yeah.
Your bank has systems that can be like, shall we just automatically round up whatever you paid for this thing and dump it into a savings account? Those are like really, like Ruth explained, really nifty little ways for you to sort of accidentally, but it's like finding cash in your pocket, isn't it? But we always say like pay yourself first. Yeah. And that goes automated straight away on payday into multiple accounts that are being able to, with like as high interest that you can get, to then go, okay, that goes towards your goals or all the different aspects of your life.
Yeah. Do you know what I read recently? I Will Teach You to Be Rich by Ramit. Do you know him?
Oh, I'm making a note. What's it called?
Online.
Ramit.
So
Ramit. Yeah. It's really, really good.
So good. So the book is called I Will Teach You to Be Rich. And to me, it sounds like a bit of an Americanized, like personal development book, like a bit cringy. But I've read it and I want everyone to read it. Like he's really conversational. He's quite casual. And he's like, guys, we need to sort our money out. Like, let's do this. And he just talks you through step by step, like really easy ways to sort your money out, like some of the ways we talked about. And he just gives you actions at the end of each chapter. So it's like, right, let's sort our credit cards out. Let's also use credit cards to, to get points and get free flights and stuff like that.
Yeah, your points.
Yeah. And let's negotiate our salary because that's one of the best ways you can increase your income. Let's look at little side hustles we can do, which I love. And then, let's get this savings account. But as you said, when you get paid, you just need a little system in place. And it sounds a bit boring and like, okay, I need to sort out a system for my money. But just do it once. He's like, do it once and then you'll have it set up. So it's like, right, you get paid. Right, let's have some pots. Let's have a credit card pot to go to the credit card. Let's have a savings pot to go towards what do we want to save for? Is it a holiday? Is it a date night? What is that for? It's good to have goals. And then investments, like, just automate it. Automate your investment, stick it in an index fund, and then just go back and check it every few months and maybe adjust it a bit. But he makes it super simple and super easy. So I'd really, really recommend that.
Okay, we're going to put a link in the show notes so you can go get that book because...
And I think he's got resources and stuff like online and spreadsheets and tools and things like that. But He's really good.
That's so good. Love that. These conversations just need to be had more. And I know we obviously talk a lot about property, but that's just one part. That's just one way to invest your money and grow your money.
And I'd say personally as well, Becky and I always talk about this kind of stuff. We talk about this conversation, but sometimes with certain groups and friends, it can be a little bit of a taboo subject, that you like talking about money is such a bad thing. But I think it needs to be talked about more, especially around women. But I find in certain groups I'm in with women, we don't discuss this. Financial literacy, for some reason, is not the same. As a guy, like a guy might be able to talk about index funds a little bit more easily than another female friend. And I don't know why. That is. But it does need
You need to be included. We need to just include ourselves, like just step forward and be like, right, come on, we're here now. But I mean, historically, women haven't had control over money for very long at all. So it's really unusual.
Is it more? Is it knowledge that's just passed down, maybe between fathers and sons or something, and then the girls are like missed out a little bit? I don't know.
Let's do it. We can be the money mothers and be like, right,
money mothers.
I love that. That's new branding.
But it's interesting because you also talked about how depending on what phase in life you're at, I can't remember what the book was, but the topic of investing is so personal. Like even choosing your index funds, like how ethical are you? Do you want, or do you not like? Do you like the idea of investing in McDonald's? Because obviously it's very successful, but then again, there might be another part of you that's vegan, like we are, and we're like, maybe I don't know. I like chickens to live, so
like maybe that doesn't align. Index fund. That'd be really interesting. Yeah, I bet there is.
I'm sure there is. Oh, I'm going to look for it now. But yeah, it is so personal. It also applies to property. Like, where are you at your life? Do you want to, like, does rent to HMO suit you? Maybe it does, or do you want to be a bit more hands-on? And
do you want to be a full-on developer as well? And, you know, we've always said throughout the podcast that we started in our 20s, so we were able to take a lot more risks. Going into our 30s, we've redefined what that risk looks like. And I think every decade, that readdress where your investing goals are, what your lifestyle needs to look like. For some people love crypto. I keep hearing about it. But then there's that.
They love it when it's going up. We don't hear about it when it's going down.
But I'm like, I don't know, that for me doesn't align with the level of risk that I'm happy to take on. So I think it's just something there's so many options and ways of doing things. Understand what they all are and what implications they have on your lifestyle, and then pick accordingly, isn't it?
Yeah, don't just do what someone else is doing down the road if they're having a different lifestyle and different goals to what you want. I think is like the big takeaway, really.
Yeah. And the interesting thing is you can invest in anything. Like property, there are so many ways to learn about property. You can spend so much money on courses, on training. It's all very unregulated. So, you know, you just have to really trust someone. But it's really easy to learn all the different property strategies. Like money, like stocks and shares, you can easily get the app and just go and get an index fund. But you can invest in gold. Like you could literally buy gold coins. They can come through the post. You can just stash a little bit of gold. You can invest in whiskey. You know, you can invest in art.
Yeah.
You can invest in designer handbags. Like if you're into your bags, they go up really well in value.
Yeah.
So actually you can have a bit of fun with it and, you know, buy the bag, buy the piece of art, buy the whiskey.
Justify it. Or watches as well, isn't it?
Watches.
Yeah, there's loads of things. So it can be quite fun.
If you can, I would suggest diversifying, like maybe get that object that holds value as well as invest in stocks if you can and property.
Because people just keep gold just in case, don't they? They're not doing anything with it. They're just holding on to it for who knows what happens in the future.
Yeah.
I know someone who she just invests in gold. And I'm like, of all the things, like that's your thing. Like, I don't know enough about it. Now I want to know more about it.
Yeah.
But yeah.
But what I love about stock market and index funds is you're buying a whole basket of things. You're not just buying a share in one company. You're buying shares in loads. So your risk is really spread. We've got the data from the last 100 years. So that's just diversification in a really lazy way.
Yeah, and I think the other key thing about it is it's a long-term thing, isn't it? You're not going to get rich overnight It's not about that.
Anything that's a rich get rich quick, it doesn't exist. So
No,
like
it
run,
really doesn't.
run, don't walk.
And it's about holding it onto it and letting the magic of compound
Yeah.
do its thing.
But also with investing, of course, yes, there's risk to it, but also there's really great reward if you have the patience and you put the work,
Would
time
you like
in.
some numbers? Let me read you my little notes because compound interest is like my favorite thing about investing, which basically means you invest some money, it grows interest over a time period, say a year, and then you invest the money and the interest, and it just snowballs and shoots up. So as an example, if we have £1,000 to start with, we chuck it into our account, and then we add £100 per month. After 5 years, if we've just put that in a savings account and haven't added anything to it, you're going to have £7,000 in the savings account. If you did the same thing, put it in an investment account, and it went up on average 8% a year, you'd end up with £8,814. So you've done nothing, and you've got £1,800 just
Especially,
from doing it.
and if you've automated it, then you've really done nothing.
Yeah. If we left it there for 10 years, your savings account, so we started with £1,000, added £100 per month. If you just put it in a savings account, you'd have £13,000. If you put it in an investment account, and again, 8% per year, over £20,000. So it's definitely a long game.
It's still worth doing it, isn't it?
All by itself. So yeah, start investing now.
Yeah, I think like it, especially in this day and age, I think it can be easy, especially like if you're young, to think, oh, well, it's not going to make much of a difference. It won't make much of a
I
difference.
think it's just harder to see the future.
Yeah.
You are, but it's gonna come. I'm so glad you did it.
Yeah. I get really excited when I meet a young person and they're talking about investing.
Yeah, so much.
And they're just like, yeah, open an investment account. You know, the most important thing is consistency and habit. So if you're listening to this and you're like, I don't have £1,000 to start with, I don't have £100 a month to put in, just start with one. Like, if you start doing that every week or every month from now, then maybe next year you can increase it to 5, and then maybe the following year 10 or 20. But you've made a start. It started snowballing. It's working for you in the background. It's just important to get that system in place.
Yeah, that's so true. Yeah, habit. But it's that same idea. When I really wanted to learn to skip, this is what I did in lockdown. I wanted to learn to skip. I didn't do it. I did do it in the end, but I would put my skipping rope on the side of the bed so that I would see it, to then make it into a habit. And I would set my alarm and I'd go outside, skip for not even 5 minutes, but slowly, every single day, I started increasing it to the point I got to 30 minutes of skipping. Wow. And I was just screaming, yay, on my own outside in the dark. But it's being consistent. You're right. It's just making that into a habit. Is just consistency, whether you even start. It's like saying, I'm not going to go and exercise because I'm not really going to have any time. But you could find 5 minutes if you can't even do 20.
For banks to just put a percentage of what goes into an account. Because if it's just a percent, if you can automate it so it's just, okay, whatever I earn this month, can you put 10% into my index fund? Yeah. So maybe that's
there are little hacks you can do. Like, I think it's Monzo that do the rounding up.
Yeah. Yeah, and Starling.
Yeah. So yeah, there are a few accounts that do it. So whenever you pay for anything, they'll round it up to the pound and they'll put it automatically in savings, and that just builds. I've got a cashback app called Quidco, but there's loads of
Quidco.
Right? We buy so much online, don't we? So if you just go to the app and then shop online, you get a percentage cashback. So again, like Christmas money or date money or holiday money, just go to the app and then do all your online shopping. Like when you're buying anything, like I bought some makeup the other day and I was like, oh, I'll go through Quidco and go through there. Got a £5 back. Great.
Yeah. I think there's another one that is called Cheddar, or maybe it's called Cheddar, or is it called Jam Donut? There's like another one that's exactly the same. I'll find it out and I'll put it in the show notes as well, because I did download that and I got that recommendation off another mum. She, what you said, bought stuff through it because she collected the points from everywhere that she was buying.
Yeah. If you're going to buy it anyway, you might as well get cash back.
Are there any other? So those are Starling and Monzo are really, really good modern banks that automate things like that for you. I don't think my more long-standing banks offer that feature. But are there any? And Quidco is such a good tip as well. Trading 212 is a great place to go. I do have a Hargreaves Lansdown account, but I think Trading 212 is like the same thing, but much cheaper. Are there any other sort of things that you recommend or tips that you recommend people have a look at when they're setting this all up for themselves?
I think when you're starting, just absorb information, because it can be a bit like, okay, I need to open an investment account. I don't know what that is. So just absorb information. So things like Girls That Invest. There's a girl in the USA called Tori Dunlop I think her is Financial Feminist is the podcast. Her first 100K is her account, because when you get really serious about investing, the first 100K, which sounds, absurd, is the hardest to get. But once you reach 100K, the power of compound interest means you then you can double it really, really quickly. And so she documented her journey to her first 100K, and now she's a multimillionaire teaching women how to invest. So just start listening, and the more familiar you get, they're talking about index funds, I know about that. They're talking about compound interest. Just go slowly into it. Read the book, I'll Teach You to Be Rich.
You've also got a course as well, don't you?
Yeah, come to me. Just come to me. So yeah, I just wanted to show people the steps that we go through just to build the financial literacy, which is basically like, let's just sort our money out. Let's figure out what's coming in and what's going out. Because you'd be surprised at the people that don't know. Like, I don't know what money goes out of my account, or I'm not really sure what my income is. So figure that out. We're gonna talk about debt and how to use it to your advantage, like use it good debt, bad debt, and get all the points from the credit cards is what we want to be doing. And then looking at income, I think negotiating your salary is a really, really good thing to do. Little side hustles as well, and then saving and investing. And I just talk people through it, guide people through it. So yeah, you can definitely come to me as well. But yeah, just look it up and get that knowledge, and then just start. Yeah, just sort your money out and start investing a tiny bit. And it's really exciting to see what happens to it. And then now I mainly invest in index funds, but also I'm like, well, that stock looks I'll have a little dip into that. So I'm like 95% index funds, and then 5% like a couple of companies that I'm interested in.
What index funds do you invest in?
I think I'm all in the S&P 500. Yeah.
Interesting. I feel like, are you Team America or are you Team UK? That's like what the question is. But yeah, no, that makes sense. I know I always knew it was either one of those two that people choose. Why did you, does S&P 500 tend to perform better? Is that why? Or
so the S&P historical average is 10.2%, whereas the FTSE 100 is 8.1%. But if I was starting right now, I'd probably go for a global fund.
Yeah, that's a good
tip. Yeah, look at ones you're interested in. Like you can get like female CEOs index funds. You can probably, I'm going to challenge you to find a vegan one.
I am. I need to.
But yeah, always go and do your homework and look at how it's historically performed.
Yeah.
Yeah.
So regarding how far back does an index fund have to exist for it to be reputable?
I mean, stock markets have only been created like within the last 100 years. So you can get about 100 years worth of data. Yeah.
Oh my gosh, this has been so insightful. Thank you so much, Sophie. What's the next steps for you now?
What, in life or in investing?
You're gonna buy another island. I know you had like another diving business last time
you know
were
what?
together.
We went back to Indonesia a couple of months ago, and it's the first time we went back in 7 years since we left it, because there's now 4 of us to fly all the way to Indonesia. That's not cheap. So we're waiting and waiting until we had the time and the money to go. We could finally go. The kids are now 7 and 9, so they were like really so excited. And we got back, and like the boat captain's daughter, who we'd sponsored through college, she was at the airport. She gave us all a sash, and she was like, "Welcome back." And then our old driver picked us up, and all our old staff were there. It was amazing. And yeah, it's just beautiful. And they were like, there were tears, because they'd adopted the kids when the kids were born. And they were like, "Why haven't you been back in 7 years? You need to come back." And then everyone said to us, "Oh, have you come back to buy it? Are you coming back to live here?" And we were like, "No, we're just on holiday." And then we were on this roller coaster of emotion. We were like, maybe we can buy it back. Maybe we could just get managers in and run it from England and stuff like that.
The next step.
We were tempted. But then a few days after that, we remembered how difficult it is to run a very remote resort. You know, you're off grid, you're managing staff, you're managing supplies. Like, it was so hard to live out there, but very rewarding. So we've decided it's nice to go on holiday.
Yeah, just enjoy it.
Isn't there Starlink coming?
Starlink's out there now, which makes all this kind of stuff quite possible.
Yeah. But my future plans are just keep investing. The business is growing really well now. So we're taking new staff members on and things like that. Yeah, just keep it all, like, next year is just about fun for me. I just want to have loads of fun.
Yeah, you deserve it. You've been working really hard. And what we love about you, Sophie, is that you are so, you are investing queen, but you also are very humble, and you're not like spending ridiculous amounts of money to enjoy life, but you're still living an amazing one with your husband and your kids, and you're helping other people to do the same. And I think that really shows.
Yeah, I think my goal is just to live a happy life. And I think that looks different for everyone. And for me, it's living by the sea, spending loads of time with my kids, aiming to go diving, hopefully, when I can. And I think, just think about what your happy life looks like, and then invest will really help you get there.
Oh, I love that. Oh, thanks so much, Sophie, for being on. You can see now why we love her so much. We'll put Soph's links to her course if you just don't know where to begin with your investing in the show notes as well. The book. If you have any questions for Soph, where can they find you?
I'm just always on Instagram, Sophie.
Okay, so we'll tag her Instagram handle down below as well. Yeah, I think this has been such a great conversation, and we've missed chatting with you.
Yeah, we need to get together soon.
Yeah. Yes. Oh, actually, in March, Ruth and I do have another Networking in Nature event, so we'll also put a link to the waitlist for that.
I'm there.
Yeah, so we'll probably see you all, have a nice big catch up with everybody there. But yeah, thanks so much, Soph.
Thanks, Sophie.
Thank you for having me.
Yeah, we'll probably see you in another episode.
Bye.
Good.